Calling Mintoak a payments company is like calling LinkedIn a resume upload website. We were crystal clear about what we wanted, and that entire vision lasted 6 weeks. When the merchant became the product manager for us is when Mintoak started taking shape.
So do you remember our first meeting?
Very, very vividly.
Okay. For a minute, the blank look made me think that you've forgotten. But let's hear it from you.
Yeah, I do remember. I came in thinking I had prepared well till such time you started asking me questions.
Actually, you may or may not remember this. My first meeting with you was my second meeting with Mintoak.
Yeah, you spoke to Sanjay first.
Yeah, my first meeting was with Sanjay. And if you had to describe that meeting in one sentence, how would that be?
There was more conviction than evidence. And the good thing is you bought it.
I think that's a fair summary because if I were to summarize that meeting in one sentence, it was quite insightful for me. I don't know if you remember, those days we had spent time with another acceptance player, and what I heard from him was slightly different from what I'd heard from you. So I would kind of describe the meeting as very insightful. We were looking for players with a differentiated approach, and that is what kind of led us to conviction.
Lucky us.
Lucky us as well. Okay, so let's go back to 2017 when you had kind of had a very stable career at Visa, and some would call it as a very decent career. What actually made you walk away? Because it's never easy to walk away from a fat paycheck hitting the bank account every month, right?
You're right. I don't know whether the paycheck was fat, but it was good. I mean, we had a decent life, stable job, some frequent flyer statuses with airlines. Everything that you would call as a reasonably well midlife or middle-aged settled career. And that's exactly the thing that made us nervous. There's so much happening around. And given that we were with Visa, we had a front row seat of what was happening. The amount of activity was surprising by any standards because we've watched this space for now almost 2.5 decades. That time it was about 15 years. That kind of activity was unparalleled, unprecedented. And in that environment, working with a global company where the thinking happens largely in the US.
That's correct.
And trying to execute for someone who's not even a part of it, that was that made us nervous, as I said. But yeah, to your point, that's founders have a very strange equation with, if I can use the term risk. My parents thought I was taking a big risk. For me, and the same for Sanjay and Rama, it was the other way around. We were thinking it was getting riskier for us staying at where we were.
Amit, first and foremost, welcome to the Mintoak family.
Thanks, Vinay.
And Raman and I were talking about you a while back. Your journey is a little unconventional, right? Walk us through your journey and maybe a little bit about what pulled you towards building a business so fine as ICC Loyalty.
My journey has been more like, Raman's. I was a banker largely with Standard Chartered and RBS, Royal Bank of Scotland. I was the head of lending for India for RBS last. Again, the similar thought process of, do I need to continue doing a large banking job, take a paycheck home? Yeah, it was not bad money. Or I look at building something of my own, which I can kind of, obviously there's a risk appetite there, but then,
Sure.
Like Raman said, founders have that knack of risk. So I took the plunge as well. And since I was a consumer banker most of my life, what attracted me towards to do something on my own was again in the same space. And that's how ICC Loyalty was born.
So I'll tell you why I will call your journey a little different from a lot of us. You chose to start up in a geography which was not your home geography.
That's right.
That's one. To go out there and build a really successful play there requires a lot of resilience. It requires a lot of determination. It requires a lot of effort. In some sense, all of us are founders, and I can genuinely appreciate um, the tenacity of a founder. So that is what I found the most interesting piece in your journey.
Sure, I understand.
And a
Absolutely.
geography where tech founders, especially, are far and fewer as compared to India.
Absolutely.
At that point in time.
Absolutely.
The nicer part about Middle East or Dubai in building a business is that it's not as cluttered as India. So the opportunity from a margin perspective, from a competition perspective, is slightly lower. That helps the cause in terms of how you can drive business vectors.
So walk us through what were the gaps that you saw uh, in the loyalty space
Sure.
in the region, which kind of was the basis for your conviction, if I may say.
Sure. So when we started out, banking rewards was largely around a processor which would process a card transaction, a payment transaction, would probably have a module to kind of convert the transaction into points using some algorithms, some very basic stuff. So it was not very elaborate on that side of the ecosystem. And then there was no integrated solution to allow the consumers to use those points.
Yeah.
The point usage would typically happen where the call center would receive a call from the customer. So it was straight away manual. Wait in the queue for a call to get answered. Then pick up the product that you want on the catalog. It will get delivered. There'll be courier delivery delays, etc., etc. So that was the ecosystem largely with almost all the largest banks in the market. We saw that as an opportunity and came in with an integrated solution, a single platform which does both earn and burn and digital. Digital was it was just about taking up. A lot of banks were investing into mobile apps, spending a lot of money to create the right journeys, to bring them away from call centers into mobile. And we kind of integrated into the mobile of the banks. So that was a solution which was one-stop solution for rewards management and clearly easier for the banks, easier for the consumers, API first. So all of that together.
Excellent. Raman, coming back to you. Even today, most of the folks think of Mintoak as a payments company. Is that fair?
I wouldn't blame them because payments is what you see, QR is what you see. But calling Mintoak a payments company is like calling LinkedIn a resume upload website. That's just the starting
Absolutely
point.
agree.
That's
Yeah.
just the starting point. We are much more than a payments company. Payment is, in my view, the first signal of trust that the merchant conveys, allowing you to become a part of his or her daily life. Because you look at payments, both on the consumer side as well as the merchant side, amongst all banking products, payments is one product that touches a consumer or the merchant daily. And the merchant is accepting payments. That's a green light saying that we trust you enough to be a part of our daily lives. It's incumbent on the payment provider then to how to become a partner. Because payment also, while it's a daily activity, it generates signals every day. Understanding those signals, leveraging those signals to orchestrate more engagement, be it driving more business for that merchant or offering them credit when they need it or offering them other deposit or wealth management products when the business is really doing well. That if that can ride on the payment platform, that's a eventual objective. Payments brings in engagement, but leveraging that engagement to do more or become a partner, growth partner for that merchant is what we enable.
That's a very interesting way of looking at the business. And I know this is not the place to talk about numbers, but we are possibly one of the most profitable payments business in the country, amongst the most profitable. But when you started off Mintoak, did you envisage this is how the journey is going to shape up? Or can I say that given your deep insights, given the fact that you spent more than 2 decades in Visa, is this exactly the kind of journey that you had thought about? Or you think you've gone through detours, deviations as you arrive at the destination today?
We were crystal clear about what we wanted, and that entire vision lasted 6 weeks. See, that's the thing. And not just us Anybody who says they had everything planned out day one and it panned out the way they had planned out is either rewriting history or trying to sell a book. Just doesn't happen. Doesn't happen. For us was the same. We, to be fair, to be candid, we knew the problem. Did we know the solution? No. It has evolved. It has evolved. I mean, from where we started was a completely different ballgame. We have, as you said, having spent time in payments, we were itching to do something on our own. We looked at various facets of payments and zeroed in on the merchant because we believed that segment was one of the, if not the most ignored segment in payments. Ironically, that's the stakeholder that supports the entire economics for the payment transaction, and they were the most ignored. SMEs, I mean, that's sounds cliched, but it's a reality. SMEs are still financially underserved. And that's where we started zeroing in. We thought there is merit in looking at payments as an enabler of growth for SMEs rather than just a transaction itself. What we wanted to do, again, the merchant ecosystem is kind of an ocean. You have to pick your pockets, pick your islands. We looked at multiple things, and that time, one of the big challenges was transaction success rates because internet was sketchy. 3G was not stable. People were not even talking 4G, 5G. As a result, transactions used to drop. So we said, at the same time, we looked at tech. The voice network was very stable. That time, faxes, landlines were working. Voice network was far more robust than the internet. And that's where we zeroed in initially, saying, can we use voice as a fallback to internet? If transaction fails, can we route it over the voice network so that the merchants don't lose out on transactions? Took us a while to crack that tech. In fact, when we were able to deliver the tech, there was so much euphoria that if nothing else, we'll at least get a Nobel Prize. But with that in mind, we went to the merchant saying, boss, do you have this problem? And invariably, we spoke to some 300 merchants across Mumbai and Chennai. And everybody said, yes, this is a problem. We see transactions. And then we showed them what we had built. They were all very impressed. Everybody wanted it.
I'm not surprised at all. Yeah.
And then we asked them that core question, will you pay for it? And the unanimous answer was no.
I'm not surprised at all again.
And the reason was, and merchants said, like, yes, transactions do fail. But when they fail, we ask the customer to get cash. They go to the nearest ATM, withdraw cash and come back. Why should we pay you for it? And that was an eye-opener. And that's, I mean, when we started, the thought was you build something and merchants will line up. But that's not how reality pans out. The process of talking to 300 merchants over 2 different geographies helped us get more insights on the real problems they were facing.
Yeah.
And that resulted in when the merchant became the product manager for us is when Mintoak started taking shape, the Mintoak that you see today.
That's a good segue to my next question. How do you think about engagement between banks and small merchants? And why do you think this matters so much? I'm underscoring the term small merchant here.
So again, going back to the statement I made a couple of minutes ago, SMEs are the most underserved. SMEs, when I say SMEs, I use it interchangeably with MSMEs. Underserved, especially when it comes to financial services. Banks also know this fact, but they struggle. Why? Because the common perception is the biggest constraint for SMEs is capital. But you know what is an equally big constraint for SMEs? Bandwidth. They don't have large teams to do multiple things. They have to take care of their business. That's the core activity. They don't have time to go to a branch, and their needs, especially for financial products, are so irregular. There's no set pattern or defined pattern, and to an extent, micro. That's for banks also, while the segment is massive, serving them through traditional channels like sales or telecalling is a very expensive proposition. Now, how do you bridge this gap? Is the problem that has been unaddressed for a very long time, but that's a problem that all digital payments aspire to solve for, because digital payments is for an I mean as let me take a step back. For any SME, for any business, payment collection is the most crucial activity. As long
Sure.
as you collect payments, your business survives. If there is any excess, that goes into banking. Banking comes after payment collection. And as payments become more digital, SMEs and MSMEs need digital platforms. The idea forever was, because this is a digital platform, this is the SME's first foray into anything digital. Can we use this to do what traditional channels were not finding it viable to do? Can you start with payments, and payments is a daily interaction business? Can you supplement that same platform with financial services so that this guy doesn't have to step into the branch? Unfortunately, the way the industry evolved for till about 10 years ago, it used to digital payments used to anchor around POS terminals. POS terminals are one, expensive, so you cannot offer them to the entire base. 10 years ago, India had 1.5 million merchants with POS terminals. Demonetization moved the needles quite a lot, but still covered about 3 million by end to 2016. There are 65 million SMEs. More than 90% were unserved. So that's the first problem. POS never addressed the universe.
Yep.
Second is, POS is not interactive. Used by a cashier, not interactive. So how do you offer other products?
It's very clunky as well.
Yes. And that's what changed over the last 10 years, especially in India. Digital payments moved from POS terminals to mobile apps. Today, you are not using a card on a POS terminal to make payment. 9 out of 10 transactions happen when somebody is scanning a QR and the merchant notices, and merchant has an app on his or her phone. They look at that app to look, when they're looking for that payment confirmation, they also see a small message saying there is a 200,000 rupees pre-approved loan. Merchant notices, may not do anything. Nobody's incurring a cost. Next time another transaction happens, merchant looks at the phone again and sees that message. 2 weeks down the line, a Unilever grocer comes in, offering this merchant an extra 10% discount if they were to buy in bulk. 10% discount is almost doubling their margin, and merchant needs money. At that point in time, because they've been using the payment platform, payment app every day, that is top of mind for them. They don't think branch, they don't think mobile banking app. They know there is a loan here. And if it's pre-approved, they go into the same app, matter of few clicks, authenticate themselves, and the money is in their account. And that's how the world is changing. That's how engagement was always required. Engagement could not be delivered through traditional channels. Payments had their own constraints. That's all that is changing. And hence, this gap is closing in. It's getting closer to reality than it ever was.
So essentially, you're telling us that transaction level insights is actually helping you build out up the product roadmap and refine the product on the go.
Oh, absolutely. Not just, for us, we look at transactions. We also, transactions always existed. What has happened over the last 10 years is transactions have grown exponentially. 10 years ago, India used to see about 500 million merchant transactions every month, largely on debit cards, credit cards.
Yeah.
Today, that monthly number is more than 14 billion. So one is more transactions are happening, but more importantly, every transaction is a signal. When a merchant uses your platform, every transaction generates signals. Those signals tell you more about the business than anything else. Let me give you an example. The biggest challenge SMEs were underserved. One was inability of traditional channels. Second was lack of formal documentation. Banks look at income statements, income tax returns, cash flow, predictability. SMEs used to struggle with that. But now when SMEs start accepting payments, every payment gives you their transactions give you a surrogate of what existed for banks in the salary segment. You see these transactions, you know what are their peak hours, what are the seasonality trends,
Yeah.
and that is intelligence, allowing you to understand and underwrite these SMEs without those traditional documents and serving them. There is an ability to serve them without the traditional channels, which were like very expensive for this segment.
I think you've articulated the use case for the merchant. Help us understand, how does the bank gain from being closer to the merchants beyond the transaction itself?
Again, going back to the same example, 5 years ago, merchants had a relationship with a bank. When I said that, but that relationship was just a current account relationship. Merchant would open a current account. Bank would know there is a business owner who's banking with them, and that's where everything ended. For banks to understand, they never understood the merchant's business. Banks to understand that business was a function of how the current account balances moved. The balances were moving up, the business was doing well.
Amit, let me get back to you. Explain to all of us, why does loyalty and rewards and engagement matter as much to a bank? We are living in a world which is full of uncertainties, and customer loyalty can shift very rapidly today. So help us understand, why does it matter as much to the bank as well?
Sure.
One, of course, is they would want to retain the customer, but is it just beyond that? Is it just mere retention, or is it something more?
So I'll break this into two parts. First part is, the payment transaction that has to go through. That's basic hygiene. But in a multi-carded market, or a wallet which has multiple cards of various banks, which card do you take out at the first point, at the point of sale or at the merchant?
Yeah.
Which card do you swipe? Now, building balances on the card is obviously critical for a bank's from a revenue perspective. Therefore, the importance of which card gets swiped. So the banks are literally competing with each other from a consumer side on making the customer spend. There could be dormancy, there could be good spenders, there could be moderate spenders. Now that's where the CVP comes in, where know-how of what the customer is gonna earn back on that transaction becomes critical. Because if you are carrying two cards, let's take an example, and you are, say, at a dining merchant, if a card gives you 10% back on dining spend versus 1%, you are highly likely to pick up the 10% card and use it on dining. Now, that's where
fair.
where the CVP comes in. So the first part is how strong the CVP is, which card gets swiped. However, why can't everyone give 10%? Now, that's a golden question. The reason is that when you look at each bank and their segmentation, I think the behavior changes. What kind of customers are you getting on books? Whom did you acquire? What kind of segment is it? Is it premium? Is it mid-market? Is it subprime? So a lot of factors go into the CVP build-up, and therefore the ability to be able to drive spends on credit cards or debit cards for that matter. The second part is, how do you implement that CVP and how do you interact with the customer? Well, you have a great CVP, but the customer just doesn't know about it. So how do you market it? How do you ensure that the customer's know-how is there for the product to get used? Now, that's what brings in the implementation of the CVP, which is where someone like us comes in, because you need to deliver that earn rate back to the consumer. And those are algorithms and on top of a processed transaction that you need to convert data into points. And the second one is, how do you interact with the customer? That on an ongoing basis, the journeys around consumer interaction and how the customer knows the product, where all does the customer, he or she, is able to see that. I think that's where the user interface, how do you interact with the customer, comes in. And I think that's increasingly becoming more important. How do you interact with the customer? Where do you communicate? The open ratios on emailers, EDMs is very low. I think it's mobile first now. So that's where the journey is kind of shifting.
And to that extent, do you think the customer habits are more or less similar across the world, or does every geography has its nuances?
Geography has its challenges, considering the nationalities of consumers. How well versed are they with, understanding the mobile, understanding what's mentioned, what languages are you interacting with them in, all that kind of comes in play. And that kind of drives the customer behavior. I would say in terms of journeys now, less cluttering is better as far as you are very, very specific to a consumer's need and requirement, and you kind of are able to interact with the consumer on lesser points rather than just cluttering the customer with information. I think that's where it's headed. It's headed towards more hyper personalization of information. Look at customer specific trends and how you can kind of work around that. I think that's where it's headed.
Headed towards headless.
Raman, in that case, do you think the India playbook can be taken internationally, or will it not be able to go international per se?
If you look at how India payments have evolved,
Yeah.
especially over the last 10 years, and I will go step back from there as well. When I was with Visa till about early 2017, for anything and everything digital payments, we used to look up to the US market because they were considered the North Star. And there was always this debate that emerging markets like India would, over a period of time, start emulating US. But the problem was that model that existed in the US or the developed countries was very infra-centric, infra-heavy. You needed POS terminals, you need plastic, and that's an expensive proposition, especially with markets where economics is more challenged than the developed markets. And that's why for a very long period of time, nothing happened, and India remained an opportunity. But then, starting 2015, 2016, things started changing in India. PMJDY happened, wallets came in, smartphones started picking up, Demon happened, and the space just exploded. Just to add another data point, as I was saying, March 2017, 500 million transactions were happening in the market, predominantly on debit card, credit cards. Incidentally, the number of transactions, debit card, credit cards at merchants, that number is still the same after 10 years. But we are seeing 14 billion incremental transactions every month. And that's a big change. Interestingly, if you look at emerging markets around India, be it Southeast Asia, Africa, to an extent Middle East, everybody is looking at India saying, if India can, and this is such a viable model to go, why not? You look at Africa. Africa, for the longest period of time, was a feature phone-driven market where fintech was and is still controlled by the large telcos. But as the market upgrades to smartphones, and the regulators there are also looking at India-like models to the extent some are talking to NPCI, wanting to emulate, it allows us an opportunity to take the platform that we built for India to those other countries. Interestingly, the way our platform is architected, it is all microservices, completely modular in nature, integrations are API. So for us, what we built for India to take it to Africa is just a lift and a shift. And we see the problems and the opportunities very similar because all those markets, there is movement happening from feature phones, smartphones. Regulators are wanting a infra-light payment model. And fintechs are seeing this as an opportunity to target those markets. As a result, banks are struggling. Very same problem that existed in India 10 years ago. Middle East, the payment story is decently better than India. But again, banks are struggling because fintechs are trying to leverage payments to get into the SME segment using better UI, UX, using their agility, and banks are struggling. And some components of what we built for India are resonating with banks there. And that's the reason it's not just the opportunity. We are present in Africa, we are present in Middle East, and should shortly be going live in Southeast Asia. So it's not what we think, but this is actually happening.
There are certain important regulatory changes that have happened in the country around MDR for UPI, etc. What are your thoughts on this? And does it change the ecosystem?
It will be, when it happens, a big positive for the industry. See,
The parliament has passed the bill, so I think the moment is now, right?
let the announcements come. I mean,
You mean the fine print?
yeah, but once the MDR gets defined, you have to understand I'm slightly superstitious about things that can happen. Uh, it will be a big positive. UPI is possibly the biggest financial inclusion story created by India and one of the biggest financial inclusion stories in the world. That's all good. We've gone from almost, and I'm talking just merchant transactions, 0 to 14 billion transactions a month in less than 10 years. Sounds all good, but without economics, is the future sustainable? Because the runway is still massive. And the answer is, will be very difficult. Today, the incumbents, which is largely the players involved in payments and banks, have spent a lot of money, but they're struggling to justify ROIs on something, and it's tech. It warrants tech upgrades very regularly. So players are struggling to justify their investments, and it's almost become next to impossible to seek future investments, which will not be good for the larger ecosystem, and hence this new development, especially around MDR, will be a big boon for the entire space.
And then I guess the most important question for both of you, why ICC and why now? Because in fact, after the announcement came in, one of the largest private equity investors in India called me and said, look, why is Mintoak going to Middle East? Why are they going outside of India? Whereas the buzz is, look, India is the place where payments are the most evolved. So what is the rationale here? And Amit, I'm going to come to you as well, because there are some questions that I have
Sure.
for you as well on this.
If you look at how we started, in fact, earlier in the podcast, we were talking about, are we a payments company? We are a software layer that sits over existing payment processing to build engagement and monetization, because our belief forever has been that while payments is the most engaging activity, the value lies on the software layer above payments to drive more with either the consumer or the merchant in terms of engaging that merchant, helping them get more business, running loyalty campaigns, and eventually cross-selling them other products like loans, insurance, and that's where monetization happens. And that's where the value unlock will happen. The playbook has evolved nicely for us. Today, we power the merchant platform for 3 of the largest banking players in the country: HDFC, Axis, SBI Payments. So when we were thinking about our next phase of growth, while we were like doing well in India, we started to see some green shoots internationally. We wanted to focus on diversification. And diversification for us had 2 dimensions: geographic diversification, and then there was business diversification. My favorite example is processing is a commodity, but it's a necessary commodity. It's like electricity. You need electricity, but you don't wake up and say like, wow, my electricity is so good. But when you see your TV running on that electricity and you watching a FIFA final, having paid for that Z5 subscription is what that wow factor is.
Yeah.
So we want to be that wow factor riding on top of processing, which is critical, but it's commoditized. And so we wanted to diversify geographically. We wanted to diversify our business with those boundary conditions. We looked at many options,
Yeah.
and zeroed in on ICC because we genuinely feel our future is brighter with ICC than without it. And the reason being, the ethos are pretty similar. They work with banks, we work with banks. They are in payments, we are in payments. None of us work on processing, but sit on top of processing. What made it more exciting was we had always been aspiring to get into the Middle East for the reasons that it's a fascinating market, multiple countries with very decent economics or revenue pools. They are in the Middle East.
Yeah.
So similar thesis, and more importantly, now that we are one company sitting on two sides of that same payment transaction. They sit on the consumer side, we sit on the merchant side. We have the ability to transform ourselves from just an engagement platform to becoming an operating system for payments for banks. Because in the age where we are in and the way AI is shaping up, the backbone for AI is data and signals. And in the banking space, nothing generates richer signals than payments. Payments has two sides, merchant, consumer. Now we get to play on both sides. So the decision was relatively simple. As I said, together we have a much better future than we could have built individually.
Okay, we'll talk about AI in a bit. But Amit,
Yeah.
how should we think about synergies here? You obviously have built a great business in the Middle East, focused on the loyalty piece. But what could be the synergies here? And look, in fairness, I think all of us agree that Middle East is a different market. It's not very easy to break into. But once you have broken into that market and you're accepted, I guess, like the financial ecosystem, you have to gain the trust there. But what, according to you, are the synergies that will drive business going forward?
So I'll take a step back actually, and I'll come to why we looked at Mintoak at the first place as a great partner to move this ship forward.
Not the press release version, the actual version.
Actual version.
Go for it.
So I feel, to start with, the founders of Mintoak, I think there's a huge synergy there at the first place. Ex-Visa, ex-bankers, similar to the founding team in ICC. Helps the cause, considering they understand the business. So it's a very strategic partnership rather than just a purchase, because genuinely the Raman and team, they understand the dynamics of the kind of business we run. That helps in taking the ship forward first. Secondly, I think, like, we sit on two separate systems, parts of the ecosystem, acquiring and issuance. Both software layers, none of them we don't process, but both of us are sitting on a software layer above the merchant leg and the issuance leg. And I think these are complementary skill sets. So there is synergy in being able to do an integrated solution in Africa, an integrated solution into some of the newer banks that we may seek. Both of us are into B2B business, so we can go with a far larger play to acquire new B2B players like banks. There's a cross-sell opportunity, there's an upsell opportunity that comes in both sides in terms of the solution. Mintoak has market leadership here, we have market leadership in the Middle East. So I think those are two companies coming together with very, very strong fundamentals. And it kind of allows us to probably generate more revenue together. From a futuristic perspective, I think this partnership helps, it'll improve our margins, it'll improve the go-to-market strategy in terms of what we can give to our prospective clients as well.
Understood. Raman, are there areas that you think that could be potential synergies outside of what Amit has already articulated?
Yes, we definitely think so. So if you look at our core thesis, which is engagement over payments, something that we feel very proud about, something that we built over payments. Two elements to this on the synergy side that we see. As Amit was talking some time back about the proposition and how you pull your card basis what proposition.
Yeah.
Today, that's largely a function of your memory. You remembering, yes, this card gives me a better proposition at that point. We have, on the merchant side, built a capability of, we've created a contextual engagement module for merchants, where we are able to nudge merchants reading the signals they generate and nudge them towards an activity that we desire. So to go back to his example, suppose we are in this area, after this you go to a coffee shop, you open your app and it nudges you saying, there's a better offer for you at the restaurant next door. Now that's a wow, because customers today are, as I said, they have to depend on memory to define which card becomes the primary card. But if there is an ability to manage their life cycle contextually
On a real time basis.
on a real time basis, that can be so much more powerful. We have that capability. I think embedding that capability into the existing ICC platform is one area that we are keenly evaluating. The other thing is their banks are also into the merchant business. Instead of us doing cold calls, which is a very long process because one of the challenges for banks is onboarding new suppliers. Now we've solved for that with ICC. The ability to upsell, as he was saying, to their existing clients is the second opportunity. The third is very similar. When we look at relatively more nascent markets like Africa, we have now the ability to go with two products in the payment selling to the same stakeholder. The economic buyer is the head of retail or head of payments for them as well as for us. Now we go with two propositions rather than just one proposition.
Got it. Amit, as far as the ICC tech infrastructure is concerned, you had kind of mentioned in the beginning of this conversation that every market has its nuances. So if Mintoak decides to go deeper into Asia, into Singapore, Malaysia, etc., would you think that your architecture is robust enough to kind of cater to clients in these markets as well?
Yes, very valid point. So to give you some examples, we were the first implementation for 3 to 4 large banks in the Middle East on the cloud. They've never gone on the cloud. It was their first so-called risk, to be outside of the bank's DMZ. So I think the dynamics are, we are an open architecture system. We are cloud agnostic. We presently work with Azure, with AWS, in Saudi we work with Alibaba, in Oman we work with Omantel. So we work in multiple clouds. We are also an on-prem solution as a system with few banks which still are wanting to be on-prem. So for us, we are geography independent. We already have an implementation in Vietnam, in Asia Pacific. We obviously in Africa, we are in Eastern Europe. The robustness of the platform is clearly there in terms of the market. Yes, the journeys may get fine-tuned. My favorite thing on this is 90% of the platform is standard, 10% needs customization for 2 reasons. One is how the specific bank looks at their journeys. It needs to mirror their segmentation and thought process around how they want to communicate with the consumers. And second is that market specific. There will be those merchant legs and catalogs that need to be added, which are very, very unique to a specific market. That is the customization. Rest, we have the ability of launching a new bank in 4 days if the bank can run at a pace.
Wow.
To that extent,
by
it's
the way,
very standard.
No. Hold me to it.
India is a market where now everything comes in 20 minutes. Groceries, medicines, doctors. So I think banks are going to ask you for the sub-banana.
As far as they are flexible on their journeys and they can pick up a standard platform and say, let's go, I think it's a very quick kill. It's a very, very quick kill.
That's very powerful. Yeah. That's very powerful. A related question to this, Raman, would be, what does scale now mean for you folks? How should we think about the next go-to-market geographies?
I'll answer the second one first. As I said, we do have a playbook in India. Now we have a strong presence in the Middle East. Having looked at the opportunity, we think there is still significant headroom in the Middle East to grow. ICC powers loyalty for 1 out of the 6 banks. They are the leading player, but there's still quite a large runway. Especially Africa is just about beginning to take shape. And we have 2 propositions. And so is Southeast Asia. So these 3 geographies will be priority geographies for us. Rather than defining a particular scale, having some presence like we have in India is what I would term as success.
And Amit, what is your sense when it comes to geographies where Mintoak does not have a foothold? What will it take to win in these markets?
I think markets are really opening up. Where we are today, and I'm sure where Mintoak is today, is by choice. We decided to focus on certain key markets, which could give us, in our early journey of evolution, give us the right margins, so that we run a profitable business, rather than spraying and going into multiple markets.
Spraying and praying.
Spraying
Yes.
and praying, going into multiple markets, burning money and not being profitable. I think it was by choice. Next evolution, I think there are clearly large markets that are yet to be attended to, which can probably even give better margins. But it's about a sales effort, it's about an acquisition effort, it's about how we can do some strategic partnerships with global players to get into those markets. I don't necessarily agree that opening of lavish offices is the right way to go to build geographies. I think it can be done through distributors, it can be done through good partnerships. Keep the cost low, build for the right model and a profitable model.
Yeah, I think new markets is no longer a problem like it was 10 years ago, thanks to a few things. One is cloud coming across markets with both cloud native platforms. All our integrations are API integrations. Banks are picking up on the API side. So integrations are also, unlike the past, not deep integrations. API integrations are much more nimble. So new markets, as long as they resemble one of our existing core markets, will not be a problem.
Okay, now coming to the my favorite part in this discussion, AI and the future of banking, right? Your thoughts on, can AI genuinely deepen customer engagement, or you're in the camp that it's still hyped up?
I genuinely think AI can solve problems that were earlier taking much longer to solve, or at some point were starting to become unviable to solve. AI can accelerate those journeys for sure, especially wherever there is need for speed pattern recognition. AI can help. I do think one should use AI for, as that, where speed matters or there is pattern recognition, because that's something AI can do better. At the same time, I feel accountability should still rest with humans. So it really depends. I would trust AI with my meeting notes. I wouldn't trust AI to negotiate with my wife, because I don't think it still can.
On the loyalty side, Amit, where will AI show up specifically?
So for me, AI, both ICC and Mintoak has a lot of data. AI, to be successful, needs to work on patterns and data. That we have in abundance. We are well positioned as an organization to work on AI models. Having said that, I feel AI can do faster coding, but the mathematics still needs to be done by humans. Okay, so to that extent, I think the journey going forward would be, you may be able to reduce costs as well on the manpower side, but you still need relevant people to drive the AI behavior. From a platform perspective, from a consumer perspective, AI will definitely help in terms of hyper personalization. I think the AI can come in, read patterns, be able to quickly turn around what needs to be shown to a consumer, for example, in terms of personalization. So I think there's a journey which is yet to be big, but over the next 5 years, I think it's going to be a very, very critical part of the journey.
5 years down the line, how does AI change the relationship between banks and merchants?
There is lots that AI can do, is doing. Again, going back to
Let's talk about a realistic base case and a bull case.
Yeah. So my sense is, especially 5 years down the line, especially in the merchant space, SME space, banking will not look like what it looks today.
I think that's fair.
Banking will become invisible.
Yeah.
Banking is embedded in the merchant workflows rather than the merchant having to run to the bank. And that journey will accelerate with AI, because today also, while a lot of digitization is happening, ability to serve is still limited because it's still manual. AI will accelerate, will just broad base the offering to a larger segment. So banks would be able to touch every SME and embed themselves in the merchant workflows rather than being two disparate entities and stakeholders. And that's what AI will accelerate.
Amit, is the level of awareness, maturity, as far as adoption of AI is concerned, similar in in most of the geographies that you are in?
I
Or
think it's lagging a bit. I think it's taking off, but I think it's still looking for those specific use cases that can kind of come in.
and do you think, is there something that ICC can do that can accelerate this journey, or is it an ecosystem issue? It will take some more time.
I think we are in a very nice spot. We are one of the unique companies which has access to customer UI. Typically, if you look at even companies which do analytics and stuff, say for banks, they don't have the user interface to interact with consumers. They just do something in the back end. We are integrated into mobiles of the banks. So we are in a unique position to be able to interact with consumers. I think we need to get the use cases correct. As far as we get into that and we will jointly work on it, I think there is a market leadership opportunity there as well.
How should we think of scale in terms of numbers? Whatever you folks are comfortable with as an entity going forward, especially in the near term, because I'm hearing a lot of opportunities in this conversation. It's not just opportunities on account of geography, not just opportunities in terms of product diversification, but even stuff like AI. When Amit talks about the ability to reach market leadership in specific geographies, can you help us put this in numbers?
For us, future, we will consider future a success if we are able to create the same equity, the same salience that we have in India or they have in the Middle East, together in the Middle East, in Africa, as well as Southeast Asia. That will be success for us.
What will you focus on? Growth, profitability, both, one?
That's
None.
an interesting question. So again, on this one, I'll talk specifically about numbers because this is something that you've always known and we've announced to the media. As an entity now, we are $30+ million of revenue, 30% profit margin. We are in a position where, and none of us, both ICC and Mintoak have historically been profitable. None of us have compromised profitability for growth or vice versa. And now we are at a stage where growth and profitability reinforce each other. And I don't see that changing.
Amit, is it something that resonates with your thought process as well?
Yes, I see. We built ICC for profit. We growth was coincidental. To be fair, we never ran for revenue and growth numbers to define how life would look. I think we went very organic over the years. Added 5 to 6 new clients every year, profitable, and then obviously when you start reaching certain scale, growth kind of takes over.
No, what I meant was, is it possible going forward in other geographies like Africa,
No, absolutely,
etc.?
absolutely. I think that's where I think the it's headed. I think we're not done with Middle East. We still have headway. Yes, we have in UAE specifically. We have 6 out of 10 consumers using at least one credit card, which is powered on our systems. We probably have more consumer data than Visa and Mastercard independently.
My question was more,
But
given the geopolitical uncertainties.
we don't see any business vectors affected on our business. Yes, there is impact on retail and hospitality, considering tourism is a bit low and it's a tourist-driven market. But beyond that, I think see our business works on residents, card spends. They're fantastic. They're actually higher than what they were pre-war.
All right. So even if geopolitical tensions were to continue for some more weeks, months, you are not seeing an impact on
Absolutely,
future growth and profit.
absolutely.
Excellent.
Now tell me exactly what convinced you to invest in us versus the other guys you were looking at.
Tricky question. So,
Tricky.
Yeah,
Seriously? After 6 years?
yeah. The reason is I look at several soft factors, but I also want hard numbers. The feedback that I had got about you folks was very positive. It came from some of the senior most folks in the industry, folks whose judgment I would trust. And when we met with you folks, I think you had a sharp point of view. I'll be honest, some points of view I agreed, some points of view I did not agree. And you may not know this, some of the other businesses scaled rapidly after we invested in you, and they scaled rapidly. So I would kind of question myself a little bit. But as they say, time is a great leveler. We know where you stand today. We know where the other folks are.
Interesting. Interesting.
Now let's come to the Bollywoodization of this podcast. We have got something called the rapid fire. And I'm going to come to each of you. One decision you would reverse if you could.
More than the decision, it's believing every bank when they told me they'll come back next week.
One number you check every morning.
My unread WhatsApp messages. If there are too many, there's a problem.
The biggest misconception people have about Mintoak.
People think our differentiator is tech. I think our differentiator is our merchant understanding of the space.
I mean, I'm going to tweak the questions a little bit about you, but some questions are going to be the same. One decision you could reverse if you could.
Yeah, if I had a choice, we signed up some of the. I'm a bit purely on business. So we signed up some of the larger banks with a fixed fee structure. I love per point pricing. I like fees. I like a fees on a transaction. I would reverse that on my business vector.
One number you check every single morning.
MIS on what the previous year's numbers look like and revenues look like.
My final question to you. What's the one thing about building Mintoak that no one outside this room knows?
It's not just about Mintoak. I am sure it holds true for Amit as well. Getting up every morning and pretending to know what you're doing. At the same time, hoping that nobody else discovers that you're still figuring out. It's a journey.
Yeah, I can resonate with that. Thank you
Thank you.
and all the best.
Thanks,
Thank
Vinay.
you for having us.